morning, everybody. Today is February 4th, Tuesday, 2020, and we're having a great day on the stock market. When I left the house, it was Dow Jones was around 200 points up, and actually this morning I did unload most of my positions, which were basically option calls on ZIA, which is a Dow Jones Industrial Average ETF that consists of 30 stocks that comprise Dow Jones Industrial Average. And also I sold off my Facebook holdings since it also jumped as well with the stock market, so I was actually able to make around 100-200% on stock options because I was buying on this major dips of 600 points and 300 points that we experienced in the last few days due to coronavirus. But now the stock market is again back at its, I would say, upper bound, and buying calls right now is a little bit dangerous proposition, because you would be buying at a high level versus a low level that we had just yesterday, for example, or better, a couple of days ago. Just to put it in perspective, Dow Jones, ZIA, which matches Dow Jones, was trading at $281, and today it is trading already at $288, which is if you are trading stock options or ETF options, is a huge jump. So at this point I would be cautious in terms of trying to enter the market from the buy side, and I would rather go on the sell side. And when I say the sell side, I mean that we should probably try to fixate the high price of Dow Jones at this point by buying option puts. What a put is basically an ability for you to sell a security such as a stock or ETF at a high price that is being traded at this point. So for example, let's say DIA is being traded at $288 a share, but just 2 days ago it was at $281. So there's a high probability that some bad news will arrive to the market, and DIA will decline in the next couple of days. So what you would do is, or what I would do today is, I would go and look for put options that allow me to sell, let's say, DIA at $288, $287, $286. And the way how I'm going to select them is based on price. I don't like to buy options at more than $1.50 per share. So I'm going to look today, and if I see, for example, that 286 option put be traded $1.50, I will buy a few contracts of that at a fixed price, and I'm going to put a fixed price at $1.50. Now, if my order does get executed, and the reason I'm saying if my order gets executed, because what I usually do is that if the stock option is being usually traded like $1.70, $1.80, I put a limit order at $1.50, hoping that the price of the option will decline. So if it declines to my $1.50 level and the order is executed, what I do is I actually almost immediately put an order for the same exact option, but at the $1.25 level. And what happens is that at the same time, I look for the option that was, for example, at $287 level. That used to be, for example, $2 a share. And before, I did not put an order for it. So, but now, since, let's say, the price of the stock is going up and the put option is going down in price, I also put another order for $286 a share, $287 strike price, but I put it at $1.50. So basically, I would start loading up on put options for TIA because of this recent jump. You know, it's just what happens is that, you know, the stock there's a high chance for it to decline. So, especially after these jumps. So I would say that, you know, that should be your strategy as well. Also, if you would like to know what to do with the rest of 2,200 ETF being traded on the stock market, please go to the website to IPOs.com, and this app will tell you what to do, not with ETFs, but with IPOs, recent IPOs that are being traded on the stock market. So thank you for your time and good luck trading.